morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonia Shenoy, and things are picking up for the markets now. We're still down on the benchmark index. The Nifty's down 36 points, around that 17,850 mark. But in the last 30 minutes, buying is coming through. Witnessing buying in the Sensex as well. The mid-cap index is now back in the green. The Nifty Bank has a gain of nearly 85 odd points. And in that, it's the PSU Banking Index which is powering through. The Nifty PSU Banking Index is up close to about 2 odd percent. The performance is not bad when you compare it to the rest of the Asian markets, where Hang Seng is down 1.8%. The Korean markets, the Chinese markets under pressure too. As I said, it's the PSU banks which are doing well, led by State Bank of India, UCO Bank, IOB, Bank of India. Bank of Baroda is also seeing buying after it got added in the MSCI Global Standard Index. Intraday, buying is witnessed in Zomato, Page and Voltas. Pull up these intraday charts. So Voltas, the street was a bit disappointment because, on the whole, the EBITDA was a loss of about 360 crore. But the intraday will show you that Zomato at one point was down nearly 5%. It's trimming its losses. Page Industries opened sharply lower, but now has recovered, is up close to about 3%. And look at Voltas. The street was disappointed by the continuous loss of market share in the room cooling business, but Voltas too has recovered from the day's low. So despite some earnings misses, some momentum is seen in the broader markets now.
It is definitely, but largely you have to say this market is so range bound, right? That 17,900 mark is something that continues to be a bit of a hurdle for the market. The Adani Group stocks are all over the place. Some of them have actually recovered quite well. Adani Ports, Adani Enterprises. So those are looking good. But let's now invite the first corporate on our radar. Kalpataru Power Transmission is in focus on the back of their third quarter earnings. The company's top line growth saw a moderation and the profitability actually declined. The company closed the third quarter with an all-time high order book of over 41,400 crores. To discuss the quarter gone by, we are joined by the company's director, Amit Uplenchwar, on the show. Amit, thanks a lot for joining in. The order book has been very strong for the company, in excess of around 41,000 crores. Can you tell us a little bit about what the order visibility is looking like? And despite having such a strong order book, there was a bit of a miss on the profitability front. Can you explain that as well?
Well, let me start by saying good morning to all of you.
Morning.
And before I give you the answer for that, I'd like to place on record all our stakeholders and shareholders for helping in achieve a seamless merger, creating one of the largest EPC companies in India today. So thank you very much for that. To answer your question, Q2, Q3 is always a seasonal quarter so far as revenue is concerned. And obviously, because of that, there have been a few bips in terms of EBITDA that we've shaved off. But, as we had guided at the beginning of the year, for the full year, we should be closer to 9% EBITDA levels. And I think we are still maintaining that we will get to a 9% at the end of the year. So far as order book is concerned, we had said that by 2025, we should get to a 3 billion revenue target. And it's heartening to see that at the kind of order books that we are sitting at, we should be getting there as planned. In terms of order visibility, for the first time in a long time, all our verticals are seeing massive opportunities unlock in front of them. So whether it's our T&D business, whether it's oil and gas getting qualified in several geographies outside of India, having closed their first order a few months ago. Similarly, in water, infra with airports, buildings and factories, railways, there is phenomenal growth and large capex outlays, not just from the government, but also from the private sector that have started kicking in. So in terms of order visibility, it's looking good going forward. In terms of order backlog, we have almost 2.5, 3 years of visibility, which is also a comfortable situation to be in.
So your consolidated revenues is $3 billion, which is your target by 2025. You're holding on to that. And in terms of your order book, you have a $6 billion target by 2025. I assume you're holding on to that as well. But can you give us some near-term targets on what the end of FY24 could look like in terms of order visibility and what the order book would be?
So we had said that at the end of FY23, we will be close to 21 to 22,000 crores of new order inflows this year. And I think we are already close to 20,000 with new orders and almost 4,500, 5,000 crores of L1 positions. So which means that, we will be exceeding our target, what we set out at the beginning of the year. And I think we will maintain similar kind of order booking levels for FY24 because we want to be selective with the kind of work we do. We have a good order backlog. The focus is going to be on further augmenting our engineering capability and getting newer geographies and high margin segments so that our overall profitability remains robust as we go along.
Amit, morning. Just want to get this straight. Are you now guiding for an FY23 consolidated revenue growth of 12 to 14%, which compares with 15% that you had previously guided? Are you bringing down the top line guidance?
So, we will be bringing down our guidance by 1 percentage point. So 12 to 14 is not that far off from 15. But the idea is that, at the beginning of this year, we had few segments, and you would have seen in transmission and some of the other sectors where the orders which should have gotten booked 6-7 months ago actually got booked now. And even the L1s that should have been converted a few months ago are getting converted now. As a result of which, so we had some, revenue that did not materialize. Having said that, next year looks promising with 20% growth at the FY24 levels.
And you also said that FY23 order inflow target or guidance of 21,000 could be exceeded. What could the new number look like? Could you inch it closer to 25,000 crore?
So, like we said, we've already got close to 20,000 in,
Yes.
and we've got around 5,000 crores of L1. So we will focus on converting those. And we should look at 25,000 crores as our closing order inflow for the year. And we would like to look at similar kind of order inflows for next year's as well.
Okay. Can you tell us any kind of divestment plans that you have of your non-core businesses, any of your assets that you're looking to divest in FY24? If yes, what would the ballpark amount be?
So, I would like to stay away from giving you amounts at the moment, but for sure, we had said that our two non-core, one is our logistics business, which was hit by the wheat crisis, which is something that is for sure on our radar for FY24. One of our road assets, VPL, is also something that we are looking at very positively. It is one of the longest tail left concessions in the boot terminology. And I think with the kind of traffic volumes that we've seen spiking over the last couple of months, there's a lot of investor interest that is being shown. I mean, we've closed we are getting 52 to 53 lakh rupees per day on VPL, which is the highest that we've ever done. And so we are very bullish that hopefully we'll get these divested next year, which we've always tagged as non-core.
Amit, we'll leave it at that. Thank you very much for joining in. That's Kalpataru Power, now merged with JMC Project. So reporting their consolidated numbers. A bit of a moderation in their top line guidance from 15%. They're now looking at a 12 to 14% top line growth. But order inflow guidance has increased from 21,000 now to 24 to 25,000 crore. Slip into a break. We'll come back and discuss what's buzzing in the commodity space. Manisha Gupta joins in as always.
Welcome back. You're still watching Trading Hour on CNBC-TV18. Well, the update on the market is that it's not doing too much. It's absolutely quiet right now. The Nifty is down about 30 odd points, and the Bank Nifty is just holding its head above water. Gives us some time to focus on some other asset classes. Commodities is on our radar. Manisha is joining in, and today the focus is on raw sugar. Manisha, over to you.
Well, thank you for that, Sonia. Yes, 1% of gains overnight, and we are trading at 21.45 for the raw sugar prices in the ICE, and this is a near 6-year highs that we are trading at right now. And when you look at the last 1 month, we have seen the sugar prices gain up by 7.5% in that space there. Well, you have seen the Chinese demand come back, and that clearly has been supportive. Also, the Europe output is impacted by a drought. drought 1 and pesticide ban 2. So you are looking at lower yields coming in from Europe, and they have been shopping in the international markets as well. The Indian sugar output also is estimated lower as per the latest ISMA report, down by nearly 7% as compared to the earlier estimates. So what we are looking at as sugar output right now is at a 34 million tons. Also, the Indian cane divergence to Brazil, rather to biofuels, is expected to be on the higher side, and that also continues to support the sugar prices in the Indian markets as well. In the international markets, the largest another producer and exporter for sugar is Brazil. Here as well, while the crop is seen well, but here also you are looking at a lot of cane going in for ethanol, and the harvest from Brazil only happens in the month of April. So the next couple of months, the markets are anticipating that we are getting ready for higher sugar prices.
Oh, thank you very much, Manisha, for that update. Need to slip into a very short break, but as we do that, we'd like to thank all our viewers once again. We've beaten all competition on Budget Day with an 89.8% viewership throughout the day. We have also emerged as the leader with an 88.2% viewership during the Finance Minister's speech. A big thank you to all our viewers for your continued trust and patronage and keeping it with CNBC TV18. Indeed, a proud moment for all of us here at CNBC TV18.
Welcome back. Let's get a quick handle on what's happening in the technical, in the technicals of the market. By the way, a couple of stocks are pulling back quite a bit. Voltas, despite a very weak set of numbers, the stock is actually at the high point of trade. So there's definitely some buy on dips that you're seeing. And many other stocks, all the Adani Group stocks, whether it's Adani Wilmar, Ambuja Cements, a lot of the cement names are now in the green. Adani Ports is in the green as well, up almost about 2% odd. So this market is definitely looking for opportunities to buy. Mitesh Thakkar is joining in. Mitesh, would you recommend this buy on dip strategy for the rest of the day on the index? And what about individual stocks? What are you looking at?
Yeah, we're not reading the index, because one, I think, is range bound and not giving any directional bias. So, we had a breakout yesterday about 17,850 that got sold into. We had a gap down today that got bought into. So it's still a contracting market. You might want to take a trade, if you get it closer to about 17,750. But that's about it. Broadly looks like 17,750 to about 18,000 as the range. Having said that, on the stock side, I think a lot of action is happening. And Iron Exchange is something which has just hit a fresh high. I was tracking the stock a few minutes back. I think there was a big breakout happening. That's a buy with a stop at 30.40 and a target of around 3,300 on the upside can be looked at. And the other stock is a buy on Maruti, where the intraday charts have kind of turned positive. So keep a stop below 88.25 here and a target of around 89.40 on the upside can be looked at.
Mitesh, yesterday you were suggesting going long on many of these IT names, some of the IT names. Today we've seen a bit of a setback, a correction in large cap and mid cap IT names. What would be the trading call now?
Well, I maintain a very positive bias on the IT stocks, and I think while today is a subdued day, I think these stocks have hardly lost ground from the higher levels. In fact, even from current levels, I think Oracle Finance looks like a stock which is starting a new trend, and once we see 32.20, 32.25 taken out, I'm penciling in targets of around 3,400 over here. I had a buy on Infosys today in the morning. It's been quiet. It's just trading 0.1% down, but I think the stock is heading towards 1660 plus level. So very positive stance on IT stocks. In fact, in case you get a market dip, if you're not buying the index, I think I'll be very comfortable recommending going long on IT names.
Got that. Thank you very much for joining in. Look forward to chatting later on in the day. Get into a break. Up next, we'll invite Nagesh Basavanhalli, the Group MD and CEO of Greaves Cotton, on the show now. Welcome back. Let's get another corporate conversation going. Greaves Cotton has reported a weak set of earnings in Q3. Margins saw some pressure and it's reported a loss at the bottom line of 6 crore. The company has also gone ahead and acquired a major stake in motion control systems player Excel Control Linkage. To discuss the quarter gone by and the outlook, we're now joined by Nagesh Basavanhalli, the Executive Vice Chairman of the company. Nagesh, morning, and thanks so much for joining in. Could we talk a bit about the electric mobility segment where your volumes dropped 35%? It's just come in at 15,000 units in the quarter gone by. What led to that weakness? Because it's impacting the margins there. And, can you tell us if there has been a subsequent recovery in the month of January, in the early part of February?
Yes. Good morning, everybody. Good morning. Thank you for having me. First of all, I think, like you said, Greaves Electric Mobility reported a quarterly revenue of about 142 crores. When you look at it, when you look at the year-to-date number, the market share is intact. We still are a 13+% market share player. We had clearly mentioned that the AIS 156, the battery standards that were coming in on December 1st, and the subsequent model year changes between 22 and 23. We had taken a planned shutdown to manage that inventory level, the obsolescence between the old and the new inventory. And so that was the reason why you saw a dip in Q3 numbers in terms of the primary. However, if you look at the Vahan database, we had one of the highest secondary. November, I think we were number 2 on the list. January, we have primary more than 14,000 vehicles. So January is back. We had indicated that due to this battery standard implementation, there could be a short-term blip just to make sure that we get the product right and the process right. And I think that's kind of what it was. But January is year-to-date numbers. We still retain our 13+% market share. So I think that's kind of probably tells you the bigger picture there.
Okay, so can you give us what the outlook would be as we move into the final quarter of the year? Because, as we were saying, I mean, even in 9 months, your e-mobility business has seen a big drop in terms of volumes. In this quarter gone by as well, volumes around 35%. And this was the fast-growing segment, right? 30% of your business now comes from e-mobility. So once these issues are out of the way, on an average, what is the kind of run rate are you looking at? I mean, are you looking to get back to 20,000 units per quarter? Could it be more than that in FY24?
Yeah, so let me give you some numbers. You're right. On the Q3, we did about 14,000 odd vehicles, right? However, when you look at Q2, we did 32,000 vehicles, right? 9 months, we have done almost 70 in the 9 months ending the quarter, 77,000 units, right? Versus a 37,000. So there is a 106% growth when you look at year over year for 9 months of 23. January, I already gave you the numbers, which is in excess of 14,000 units, right? So I think year to date, I gave you the number of 13+% market share and in the top 3 or 4 people, right, in the electric mobility industry. So I think you're going to see us from the last year, 62,000 units that was done the entire year. We've exceeded last year's numbers already in the 3 quarters. And if January is an indication, and our products, by the way, we just announced 6 new products in the Auto Expo last month. We announced a brand new campaign, Hargali Electric, last month. And we have a lot of new dealers coming on board. So I think we are quite optimistic about the 4th quarter.
Okay. Just one clarification. You said this transition to meet the new battery norms, that impacted the EV production and the primary revenues in Q3. So is there a possibility that it could hit in Q4 as well, or is that entire transition done with now?
So I think the phase 1, as you know, was in phase 1 was in December 1st. Phase 2 comes on April 1st. Our teams are quite confident that they will be ready and by April 1st. So as of now, with the visibility we have, we do not expect major disruption in April. But like I said, the bigger picture here is 60 odd thousand units the previous year. We've already done 76,000, and we are on record to probably significantly go over 100,000 units this year. So 60,000 plus going to 100 plus thousand this year, right? And you may see a 1 month blip, but overall, quarter on quarter, you should see us grow.
Just some more clarity on what the February and March e-mobility volumes could look like. Can it continue at this 14,000 unit run rate that you enjoyed in the month of January, or is there going to be a blip in any month? And what would determine the volumes, the primary volumes?
We clearly do not give forward guidance, but one thing I can tell you is January was a strong month. First 2 weeks was a little slow because of the typical inauspicious period at the beginning of the year. The second 2 weeks were phenomenal for us in January. So February is continuing to be in the looking like a strong month. The new products are coming in. We have launched the Ampere Zeal, which was a sub 70,000 rupees product that we had shown in the Auto Expo. We've already launched it. They are getting to the dealerships as we speak. The Primus, which was the other plus 1 lakh new product, is in the final stages in our plans. This quarter, we said we would launch it. So you will get one more new product. Magnus is one of the most established two-wheeler electric vehicles. So that is doing strong. So I think when it comes to manufacturing capacity, people, talent, new products, we're there. So I expect things to be positive this quarter in that sense.
Okay, all right. All the best. Thanks a lot for joining in. That is Greaves Cotton. Their numbers this quarter were very weak because they are making a transition to meet the new battery norms, and that impacted their EV production as well as their primary revenues in Q3. But they say it's a 1 quarter blip and things will pick up in Q4. Let's slip into a quick break on that note. We'll get you more on the earnings picture. A couple of banks as well. The management of Indian Overseas Bank will be with us in just a bit. Welcome back to Trading Hour on CNBC-TV18. Well, Indian Overseas Bank is what we're going to look at right now. It came out with the third quarter numbers, looked pretty good. The lender recorded an expansion in net interest margins, posted the highest profits after tax in 30 quarters. To discuss the quarter gone by and the outlook, we're joined by Ajay Kumar Srivastava, the MD and CEO of the bank, who's going to take some questions for us. The NII growth, by the way, was 44% and the profit growth was over 22%. So good set of numbers coming in. Mr. Srivastava, thanks for being with us on the channel. I just want to understand from you, what were the slippages, the exact figure in the quarter gone by? And what is the outstanding restructured book now? Last quarter, I think it was somewhere to the tune of around 6,000 odd crores. Can you give us some of those key numbers and what the outlook is?
Yes, sure. Thank you. Good morning. In fact, I will start from slippage. Slippage for the quarter Q3, it was, to be precise, it was 1,556. And out of this, 50% came from one big account, corporate account, 750 crores. And the remaining 700 crores, out of that, majority was contributed by education loan. The legacy education loan which all banks in the southern part of the country, and IOB in particular, has been suffering. Asset quality was an issue there. So 300 crores from educational loan, and remaining were a small agri, MSME, and retail loans. So on the slippage front, there is no concern. 1,556 was the addition, and against that, we recovered around 2,000 crores, and out of which around 450 crores was cash recovery. The total restructured book of the bank is, as you rightly said, it was around 6,000 crores previous quarter also, and the same is continuing. There was some stress in some of the MSME and retail accounts, those restructured accounts. But with close monitoring and follow-up, we have been able to ensure that asset quality does not get deteriorated. And it is maintained at the same level, almost 6,000 crores of our total credit book of 1,75,000 crores.
Okay, so your slippages and your restructured book is pretty unchanged on a quarter-on-quarter basis, right?
Slippages, yes, more or less.
The quantum
last
of
quarter
slippages at 1550 crore is similar to what you had
Yes.
recorded in the prior quarter. Okay,
Yes,
got
and
that.
this year it was a conscious decision to add more slippages from education loan portfolio.
Okay. Can you tell us the guidance on the net interest margins? Because we have seen a substantial pickup. It stands at 3.27%. Do you think you can hold on to NIMs at these levels?
Yes, the roadmap is very clear. In fact, we want to increase it by another 10 to 15 bips. We want to stabilize at around 3.45, 3.50. And of course, you can see on the screen also, quarter on quarter basis, there is increase in NIM by 48 bips. And on year, it is almost 80 bips, 84 bips. So that is how we have covered the distance as far as NIM is concerned, mainly because of increase in our interest income. But going forward, guidance is that we will like to settle around 3.45 to 3.50 on a longer horizon.
Okay, 3.4 to 3.50 is your longer horizon net interest margin target. Got that. What about loan growth? How are we looking over there? Are you seeing growth come back across pockets, whether it's corporate, retail, MSME, agri? And what is the overall loan growth that you're looking at for the fiscal FY24?
Yes, so far, if we speak about first 9 months of this financial year, we have grown by 18%. And growth has been all along in all the sectors. In MSME, we have grown by around 24%. Corporate book has grown by 20%. Retail around 13% and agri around 14%. So overall growth you can see in all the sectors. And one special thing about IOB's credit portfolio is that out of total portfolio, 72% comes from RAM, that is retail, agri and MSME. And 31% comes from corporate. And overall loan book portfolio is like this, only that all these four parameters, I will say, RAM and corporate, it constitutes about 24 to 26% of the total portfolio.
Okay.
So it's very spread.
Do stay on, sir. We're getting some important updates. There is going to be a GST Council meet on 18th of February. So that is next Saturday, where they will consider on the possibility of a rate reduction on cement, as was announced by the Finance Minister. Remember, the current GST slab on cement is 28%. If it comes down from 28 to 18%, Jeffrey says we could see a 7 to 8% cut in customer pricing, which will provide some fillip to the volumes, a minor fillip, but there could be a bit of a fillip, and it will also be positive for pricing in the medium term. So the GST Council meet is scheduled to be held on 18th of February, next Saturday. The exact agenda is still going to be circulated, but the Fitment Committee could meet to decide on the rate reduction on cement, as announced by the Finance Minister. Current slab is 28%. The street is hopeful that perhaps that will come down to 18%. So that's the latest update that we are getting. Mr. Srivastava, just one final word then. Could you give us an indication of loan growth and how things are likely to pan out in FY24 and what we could see in Q4?
As I said, for the first 9 months, growth has been around 18%. It's well above the industry's average growth. So we like to maintain at this level the kind of pipeline proposals in pipeline we are having. I think we will be able to maintain this 18 to 19% growth in this financial year. And going forward also, the guidance will be that growth in all parameters, including credit, it has to be double digit, but we will be looking at growing our credit portfolio by minimum 14 to 15%.
Okay, all right, Mr. Srivastava, we leave it at that. Thanks a lot for joining in and speaking to CNBC-TV18. By the way, a lot of stocks are moving up. I just wanted to get them on board. Escorts Kubota is having a smooth run, up almost about 6% right now. Volumes are also picking up on Escorts. Page Industries, despite a weak set of numbers, Page Industries is up almost about 4%. TVS Motor, Naveen Fluorine, all the earlier darlings of the market are sort of seeing buying interest. KPIT Tech, Endurance, IRB Infra, SRF. Generally, when these stocks start to rally, perhaps, the feeling is that perhaps the worst of the market fall is behind. There's a lot of buying on dips that you're seeing in some of these erstwhile favorites in the market. So don't lose sight of that. and a couple of others as well, the likes of GSPL, etc., looking pretty good. So while the overall market may be quiet, there's plenty of buying, especially in the non-index large caps of the market today. TVS, Page, SRF, etc. Let's slip into a quick break. We'll get you more on the markets on the other side. Stay with us.